Looks like Gloves not doing too well. Disclaimer, we do own some of the companies mentioned in the slides, and as usual guys, now what we say should be taken as financial advice. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. So Gloves are down roughly 10%. As you can see, Hartalega around 10%, Kosan is 9%. Not sure where Top Glove is.
Oh no, because Top Glove haven't announced their earnings yet.
I see.
But then it's going to follow soon.
Yes, so we'll start with that. I think their earnings that they showed recently, not too good, which I think everyone was expecting some sort of recovery, which is why you saw, at least in, I'm going to say July, there's a bit of a recovery, but it seems like it was quite disappointing.
Yeah.
So let's start with Hartalega.
Yeah, so this is their prospect. If you look at their latest quarterly, they're actually making still loss-making. The reason why they're still making loss-making, even though after the impairment is already recognized, right, is because there's this one-off severance payment province and other contract obligations. So they have to pay out those that employees that maybe they lay off. Right. Some is already like they join another factory other than the Bestari factory. So there's still a cost that's going to be incurring until maybe financial year 2024. That's what the management actually notified. And then also another thing is that the Hartalega's prospect for the future is that they say utilization rate might start to improve starting from 2024. So right now their utilization rate is around like 40 to 50%.
Okay.
Yeah, it's still quite struggling, and then they expect it to be better in the future. And another one is that their total production capacity is now at 33 billion pieces compared to 44 billion. So yeah, that's actually a massive cut in supply. In production. And then the last one is the ASP is going lower in the future. I mean previously, because they did mention not only Hartalega but also Top Glove, they say that ASP they start to re-hike it to cover some costs, but then right now they are trending lower again because of China. Yeah, if you recall in our previous video, we did mention that China is charging around 16 to 17 US dollars per 1,000 pieces. Now, it's dropped again to 14 to 15. So they are really trying to eat up a lot of market share from this player, and our local players are kind of suffering because of that.
Standard.
Yeah, so yeah, not so good for Hartalega's prospect. But another prospect that we can look at is actually from Kosan. Kosan also is pretty much similar to Hartalega. So they actually gave a number. They say that utilization rate will improve to 60 to 70% once the market start to improve. And another thing to take note is that they also have decommissioned some of their old plants that is inefficient. So right now their total capacity is around like 24.5 billion pieces versus like 33.5 billion previously.
So what do you think is, before you move on, I'm sure a lot of people watching this will be, Top Glove shareholders as well. And do you think that is really going to be the same story? Now the quarterlies are not out yet, but do you think it's going to be?
Yeah, most likely, because Top Glove is the one that is suffering the most because the lack of cash also, and they are relying a lot on external debts. And also fundraising sukuk and everything.
The perpetual sukuk.
Correct. So Kosan and Kata, they are in a good shape because they got a lot of cash to burn.
Yes.
Yeah, the other one, they have obligation to pay and also a little bit cash to burn. So yeah, but we shall see. They haven't announced anything yet.
Never know, there might be surprises.
Yeah, I'll be surprised if they actually raise ASP again, or they plan to raise ASP in the financial 2024.
Because that's what they mentioned, right? It's like going to be some sort of normalization and a period. Yeah. I think this is like a couple of months back. We did a TikTok on it.
Yeah.
But things change. Right?
Yeah, and I believe that even after they raise ASP, right, sales volume dropped because of that.
Yep. So
yeah, there's a negative effect to that. But the one thing that is interesting is that out of these big four companies, right, Hartalega, Top Glove, and also Supermax, Kosan is the only company that has been buying back their shares. So the management as well as the Aberdeen Malaysia, they have been like actively still acquiring shares, whereas the rest of the big four, there are still no signs of buying back.
For those who don't know, Aberdeen Asset Management is one of the best fund management companies in Malaysia. They have a very, very, very solid track record over decades. So always very interesting whenever they start acquiring shares. Although nowhere in comparison with the Lim family and Tan Sri and all that.
Yeah. Correct.
And I think there's a saying, right? There's all sorts of reason why someone would sell a share. There's only one reason why someone would buy it.
Correct. And it's totally different opposite from Top Glove, because I believe previously Corsan didn't really buy as aggressive as Top Glove when the glove was at the peak. So there's actually a reverse. Top Glove buying more on the peak, Corsan buying more on the low.
Yeah, I mean share buybacks is all about, it's no different from share investing, because you're buying shares at the end of the day, right? And so if you're an owner, you have to be aware of where you are in the cycle, and you actually want an owner that buys the most shares in a down cycle of the industry, which will be reflected in the share price. You do not want an owner who buys at the up cycle.
Yes, correct.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, so this is just a brief industry outlook. Right now, their glove demand trend, previously they kind of projected to have about 8 to 9%. So previously they are very optimistic because they mentioned that it's going to grow to like 14 to 15%.
Yeah, I remember Tata Lega saying, even conservative Tata Lega was saying something like 12 to 13%. Like that.
Yeah, still double digits. So right now, I believe we will not see a normalization happening very, very soon. So you can see that 2024's numbers, right? The capacity versus the demand is still quite, there's still a gap between them, and there's still a surplus. But we shall see in 2025, 2026, because I think those 2 years are quite crucial to see whether normalization has really been happening already because of all this price war and everything, right? So we shall see further whether normalization will be happening sooner than expected. So this is just a final comment. Right now, Malaysia players are kind of it's kind of getting restrained by this China market because they have a lot of cash. They also have like subsidies.
There was a small comeback, but then now it's not.
Yeah, because also they have a subsidy from their China government to control their costs. I mean, at cheaper electricity costs. And another two thing is that the oversupply has still been prolonged and there's still no sign of recovery. But so that means that the bottoming out process may take longer time than expected. I think previously we did mention like maybe 2025, 2026 we'll see some recovery, but then 2024 still seems like a year that they will still struggle. Yeah, so but we shall see whether how things will play out for glove. And that is about it for the glove companies.
So you're going to tech, and tech is, good year so far.
Yeah.
I think if you follow US markets, I think it's quite clear. Pentamaster at 18, MeTech Innovation 18% as well.
Yeah.
And we broke it down for Penta. We look a little bit more into Penta.
Yes. So actually there is these two companies reported great so far, very positive outlook. Yeah. There's actually another 3 more companies that also reported. So they are more like a mix, very negative tonation. Right. So this is Penta's prospect. These are, I believe, if you attended their management briefing, then only you get this kind of like business insight. So they kind of expect the revenue from their ATE segment will contribute 70% going forward, and the factory automation segment they will contribute about 30%. I think last time this FAS is very small amount. It's like 10 to 20%, and now they are growing at a quite an aggressive mode lah. And then majority of the money just generated for their ATE segment is coming from the automotive side. So automotive, you have your EV, because you can see that they are giving a lot of these burn-in testers for silicon carbide and also this hybrid pack power module. So this burn-in tester for silicon carbide has driven a lot of demand from the market, which resulted their revenue contribution to increase from 44% last year to 71%. Yeah, so that shows how much, a lot of business for this EV industry. And then another one is they also have opportunity from this Infineon expansion, especially for this SiC tester. If you recall, in our previous video, we did mention that Infineon also has like spurred a lot of foreign investment into, I believe, in Malacca or somewhere, or Penang.
Right.
Yeah, so that's why I think Pentana Master will also get some opportunity from there because they have this burn-in tester for this SiC. And then the remaining one is just the semicon and electro-optical segment, which kind of dropped. Previously, they contribute about 56% of the ATE's revenue contribution. Now it's dropped about half. So now it's like 29%. So this two segment is more catering towards the integrated chips and smartphone. So your consumer devices and whatnot.
Yeah.
So you can clearly see that automotive for EV is on the rise, and then the consumer side, the smartphone has been on the down. So there's these two outlook for it. And then for their FAS segment, which is the factory automation segment, they are getting more business from the medical devices. So that actually contributes about 54% of the revenue contribution for FAS. Okay, so that is Penta. So far, very positive. Now we look at Me. So far, Me, even though they reported good earnings, right? I think their profit is like about double, but then their true profit is actually still down. The reason why they reported up is because of Forex and interest gain. They also did mention that their business segment, the Cebu and also SMBU, they're still struggling because of this industry slowdown. The reason also is because they are focusing a lot on this mobility and wearable kind of like segment. They also do cater towards automotive and high performance computing, but that I think they still kind of like reported very so-so numbers. So majority of the gains are coming from Forex and interest gain.
But the market is rewarding them.
Yes, correct.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
Okay, so this is another mixed outlook, or rather they kind of reported not so good numbers. So we have Dufu, Emulus, and also Franken. You can see Dufu is still quite, very flat, pretty much like 5% on the year to date. Then the other one is about 10% from Franken. The last one is Emulus. That one has been hit quite badly, dropped about 33%. And we shall have a look at each of these companies' prospect and outlook. So this is just the general consensus for these three companies. Although they all reported bad numbers, they still kind of positive in the future. So they say that for Dufu, there is a potential recovery beginning in 2024. For Emulus, there may be a small recovery happening in Q4 2023. Emulus, they are catering towards the Chinese market, especially from China. So right now, I think the revenue side actually dropped about like 50-60% from China. But then if let's say they recover, right, then I think we shall see some rebound for Emulus. Not a buy-sell recommendation, but then that's what I personally think. And then last one is Franken. They're also seeing semiconductor sales improving starting from May 2023. And they also foresee that there may be a recovery for second half of 2023. So all of these three companies are quite positive in 2023-2024's outlook, which is pretty interesting, even though they reported bad numbers.
Sounds about right. I mean, we've been in I think close to, I don't know whether 2 years, closing up to 2 years now for the semiconductor slump. So you can see that there is also a consensus among all the different tech companies that 2024 is the year that either will recover or it will sunk less.
Yeah, correct. So this is just the final comment for tech. Different results, but then so far they are quite positive on the future, and probably maybe this industry has bottomed. That's just our personal opinion. Maybe not. Maybe you still like be stagnant along the way. But yeah, so that's about it for these two industries, for the tech and the glove industry.
Yeah, guys, if you want like way more in-depth stuff on tech industry, different companies, like we did a full-on report for Dufu Technologies, Franken. We also talk a lot about Emulus in our Telegram portfolio, which is, I believe, part of it. Is it still part of it?
Yes.
Okay, see, I give you guys a nice tip, right? Anyways, we can help you shortcut your research, right, using FIRL Pro, right? These reports to help you, reduce your time required to find some of these potential investments by 90%, right? All it takes is 15 minutes for you to read these reports. And the best part is that if you sign up on the program, Within 10 days, if you think doesn't really suit you, you can ask for a refund. You get it, ASAP. And if you want to check out, get a taste of what's it like, you can actually check out our free sample link, which is discoverable in the comment and description section. But whether or not you sign up, as usual, thanks for the support, and I look forward to seeing you in the next video.